Yeah.
Even that one, that's an interesting one, right? We'll have to put some protections in pretty quick, or you'll have parents on kind of junior master chefs selling off the next 30 years of their kids'
Yeah.
income when they're 6 or something, right? So the brave new world of tokenomics. That's cool.
Yeah.
All right. Welcome back, everybody, to another episode of Token Talks. It is your host, Todd Pierce, and Jared Park here with you. And we are actually very excited to have Claus on the call with us today. And as you can see with the backdrop in Klaus's screen, Claus is from DigiShares. And I was actually having a quick chat with Claus just before we hit the record button, and I've consumed many, many hours of content that these guys are putting out regarding tokenization. And it's a real pleasure to have you on the podcast with us today, Claus.
Thank you. Likewise, it's a great pleasure to be here.
Wonderful. So I guess for those that aren't me, who've spent, many, many hours watching you, can you give the people that are watching and listening a bit of a background about yourself, about DigiShares, and what you guys are doing in the market?
Yeah. My name is Claus. I'm the CEO of DigiShares and one of the co-founders. I have a background as a researcher. I have a PhD in computer science, but I left academia pretty early and went over to the business side. I've stayed there for many years, started several companies. My PhD is actually in AI, so my first company was also in the AI space, but it didn't really take off, and generally I've been disappointed by AI for many years until now, where we have ChatGPT. So I left AI and went to blockchain because I thought it was much more interesting, and the potential for real disruption of an industry, I think, was actually much more likely with blockchain technology than it was with AI. Maybe not so much more. So I went into blockchain, I think, around 6 years ago. More as a career decision, I would say, because I thought the industry would take off, and whatever I did within the blockchain space would benefit me longer term. So I've, together with a couple of other guys, I started a company called Venture Fusion, which was really a kind of sort of a startup incubator on the blockchain, with the idea of bootstrapping startup projects by using tokenized equity in the project or startup as a kind of means of payment for anyone participating in the project. The idea wasn't so good. It was actually really difficult to get off the ground, but it exposed us to tokenization really, really early in the development of the industry. Back then, there were only a couple of companies in the space, and they had really poorly developed solutions. So actually, we started developing our own solution for our own use, and quite quickly found out that there was more interest for that solution than compared to our original idea. So we switched over basically and focused on developing infrastructure for tokenization.
How long ago was that? Was that 2018?
Yeah. It's a few years ago, and quite early in the development of the industry, and I think lucky for us that we stumbled on this opportunity. But I would also say the first couple of years we didn't see any real interest for the product itself. It sort of took off around 2 years ago, I would say, where the interest really started, and since then it's just been developing really fast, growing all the time.
Absolutely, and I've seen a number of the webinars and shows that you've done on YouTube, and you've had some great guests on there. So your platform is a white label solution, right? For companies or real estate professionals, or because you don't just do real estate, right? You tokenize also many forms, like you do various securities as well.
Yeah, correct. We are asset agnostic, you could say. We tokenize any kind of asset or fund or project or company, really. Anything that you could say is an investment object or sort of conveys ownership rights, any type of security. It could be equity, bonds, revenue share, profit share, debt in different forms. Even sort of non-securities in some cases, like a barrel of whiskey, for instance.
Yep.
So there's a lot of innovation going on in the industry, and you see a lot of assets being tokenized, a lot of revenue streams. But the majority still is clearly real estate. I think it accounts for at least 80 to 90% of everything we see.
Interesting.
I was going to ask actually, because obviously, we're working in the real estate and tokenization, so that'll definitely be a concentration, but it's probably a subjective call. But what would you say would be the most unusual asset or class of assets that you've kind of, because I've been watching Coinly, someone got me onto that a little while ago, where they're tokenizing fractional ownership of luxury watches, which kind of makes sense, but it's not the first thing that you think about when you think about tokenization of assets, right? So have there been any that have really stood out to you as thinking outside the box?
I think future income from maybe sports people, I think is an interesting one.
Yeah, that's an interesting idea.
We actually hear really good ideas almost every day. So there's a lot of business innovation going on here, but I can't think of anything except that example I would say right now.
Yeah.
Even that one, that's an interesting one, right? We'll have to put some protections in pretty quick, or you'll have parents on kind of junior master chefs selling off the next 30 years of their kids' income when they're 6 or something, right? So the brave new world of tokenomics. That's cool.
Yeah.
How so you've been involved with tokenization for a long time. You could almost say, in the beginning of it, right? How have you seen the market or the industry specifically around tokenization evolve over the last couple of years?
From being extremely early stage to being just early stage now, I would say.
Yep.
So we've seen the space mature quite a lot. We've seen a lot, sort of the ecosystem filling out with actors taking on different roles. And we've seen, I would say, certain issues in the market getting resolved, at least to some degree.
Yep.
So I think that when we started 4 or 5 years ago, the infrastructure sort of in the ecosystem wasn't in place, right? So if you wanted to tokenize something, you'd be severely handicapped. It would be very difficult for the first thing to find a legal firm that could represent you and sort of could do the legal work, because very few knew about it. You'd maybe be hard pushed also to find a very common means of payment like USDC, for instance. Doing on-ramp and off-ramp would be hard. Getting users to use wallets would be hard, right? So the infrastructure just wasn't very developed at this stage. So we've seen all these things move forward, right? So today we have, 40, 50 legal partners around the world who are familiar with tokenization. We have wallets being used more and more, so we can actually tell our clients to just use a wallet-based solution, right? Because the investors will actually want and accept the use of wallets. We have an increasing number of stable coins, liquidity in the stable coins. We have a number of custodians. We have exchanges slowly developing, right? So it's falling into place. It's not just us; it's the entire ecosystem that's coming forward.
Absolutely. And do you have a preferred chain when it comes to security tokens?
Yeah, it's dangerous to say, because there are strong communities around the different chains, and each has its own benefit. But there's no doubt that the biggest chain is Ethereum, right? Still, gas fees have dropped, so it's become quite easy, inexpensive again to tokenize on Ethereum. It has the biggest ecosystem, right? So everything is just more developed. You have more stable coins, you have more custodians, more exchanges. So everything is just easier.
Are you finding now? Oh, sorry, Joe.
I was just going to say, it is an interesting point, right? Because there are, as you said, the ecosystem's so big, right? And with the interoperability problems that are still going on, there are. I'd be curious on your opinion, because we've been looking into this ourselves, and I think there are other chains that offer some market advantages over Ethereum, but I think it'll be quite some time, right, before the use cases are there to actually allow for integration that can outweigh actually get it up to that level, right? And I was going to say, actually, coming back to what you were saying before, it's interesting the way you said with the way that the space is evolving in this way since 2017, 2018. I was actually going to say, cards on the table here. I think we probably have to say thank you in a way, because it does seem like you guys were there, kind of paving the way for the projects that are coming forward now, which has been great. One question that I had, you mentioned about the additional projects that are, there's now, like you said, there's legal advisors, there's tax specialists, there's people who are, there's plenty of different exchanges and different decentralized, centralized, all this kind of stuff. And I think, if I look back to kind of the early 2000s, there's always tends to be an amalgamation, right? There's the size of the market will grow, the number of players will grow, and then that hits a certain point where it starts to become re-centralized because you have the economies of scale and you've got all that kind of leverage. Do you see that happening in this space, given that that's kind of the antithesis of what blockchain and the industry is supposed to be about?
Yeah, it's a bit of a controversial question, I would say, because we actually do see actors that try to dominate the ecosystem, which goes against the blockchain vision, I would say. But of course,
this is another one where you can't name names, right?
No, we can't name names, but it's of course it's also common business tactic, right, and strategy that you want to dominate a large part of the ecosystem. But I think you should. We see sort of large players in the ecosystem trying to create like vendor login within certain areas of the industry, right? And we think that goes against what we are trying to achieve. I think it's from our perspective, we prefer to be really good at what we are doing and then interacting with all the other players in the ecosystem and trying to develop something with others, right? So for instance, we don't create or enforce our own protocol or chain, which we see us doing. And we, even though we are working on exchange as a side project, it will be open for anyone to use, right? Also projects tokenizing with our competitors and so on. So I think it's very important that we try to keep the building blocks interoperable to as high a degree as possible for the ecosystem here, because I think that gives the higher chance of success for all of us, actually.
Absolutely. So for those that are watching,
turn on the light here again. Sorry.
Oh yeah, you're right.
Good.
It turns off when I sit too still. It's all right.
So for those that are watching, could you just explain to us, I guess, so if I, for example, I'm a business owner, and let's use real estate because it's basically what we do. So let's just pretend that we're a property developer, and I've got $100 million worth of property that I want to take and tokenize. I guess, what would your service, what would DigiShares, how does that work for that property developer? Can you kind of explain that?
Yeah, so we're basically, you could say, a management tool for several processes around tokenization, right? So you can of course mint and create the tokens themselves and manage them within the system. Yep. And you can use the system as a kind of investment management, crowdfunding type platform with an investor dashboard and an investor onboarding functionality. You can use it as a sort of compliance, corporate management, share cap table management system, tracking the share cap table over time, doing corporate actions such as distributions or dividends, shareholder meetings, votes, and so on. Yep. And also stuff that is required by the law, but we don't always see as a functionality in tokenization systems, such as the forceful removal of tokens from an investor back to the company, for instance, is required by law, so we need to have it.
Yep.
And then also it's basically a trading system, right? So there is a bulletin board in the system that allows any real estate developer buying the platform to easily facilitate completely digital and automated trading among their existing investors and shareholders.
Wonderful.
And the liquidity part is almost the most important part of it, right? It's one of the biggest values.
Absolutely.
Well, that's a brilliant segue into the question that I had that I've been ranting on to Todd about for quite some time, because I've seen a few of the DigiShares presentations and a few others as well. It's that that liquidity premium. So I've heard people describe it as an illiquidity or a liquidity premium, depending on which way you're looking at it, right? But the notion that an asset is more valuable the more liquid it is, and that is obviously something that is, that goes hand in hand with the tokenized economy that we're trying to bring forward here. One of the things I was a little bit curious about was, do you think, because this is such a new and emerging economy, the valuation processes that have been around, if you had a house or a property fund, for example, there's a TradFi valuation processes that you can choose to apply to that to just assign a fair value. But given the levels of liquidity, liquidity is one thing, but you also have to have demand. So this will be an evolving space. Do you see those valuation processes evolving in a significant way, or do you think that what we have at the moment will stand up more or less?
Stand the test of time.
Put your professional relationship on the line. No, I think I'm quite interested.
It's a great question. I don't think we have so much data yet, right? So we put one real estate asset from market space capital on T0 for trading, and I think there's been very limited trading actually because the existing shareholders don't want to sell. So that's one example, I think, where the price would go up, right? Because the existing shareholders, really don't want to give up on their investment, right? But I couldn't say longer term, right? So you have also a company like Invenium trying to become middleware layer where they get data on appraisals for use within trading platforms and so on. For our own real estate exchange, we are considering to have trading intervals so that we don't trade too much or too far away from the appraised value. Yesterday I saw that I think it was Blockchain Capital, which is a listed VC fund, as I understand it, traded VC fund that was, as it traded now, I think 75% under its NAV. So of course you'll see cases like that with arbitrage opportunities. But I think it's extremely difficult to predict what's going to happen.
Yeah, I dare say, and it's almost interesting the way that it feels like this is almost becoming normalized. I'm sure it's not outside the space, right? I mean, we live and breathe this kind of thing every day. So I think if you weren't in blockchain, you'd think it was crazy. But when we start seeing, funds that are sitting, like you said, at 75% out of whack with the actual underlying values, and we think it's normal, it's a it's an interesting position to be in, that's for sure.
Yeah, it is. Yeah.
Sorry, I just trailed off there. I was hoping Todd was going to jump in with a question.
Hey, mate.
Apologies. We'll edit this bit.
You know what I'm good at, mate. Editing.
Absolutely.
Right, so let's dive into some of the questions that Tom has. So I wanted to just intro what you do, so that way people know about DigiShares before we dive into more of the questions that Tom put together. So let's get into it now. Cut. All right. Yes. Super important stuff, Jared. I do have a question for you though, Claus, and that is, for those that are watching and listening, can you explain the concept of security tokens and how they differ from traditional securities?
Yeah. So security token is essentially a token that's a security, that's classified as a security, right? So it's a token that somehow is viewed as a security by the regulators. So it has typically ownership rights, it might have voting rights, so forth. It could be similar to equity or to a bond or to a revenue share or anything like that. And falls under security regulation, so it has to be treated as security. So if it's sold or offered to investors, it has to follow normal prospectus regulation, prospectus exemptions, and so on, and completely falls within normal securities regulation.
Yeah.
So it's different from utility tokens, of course, that are unregulated instruments and try to dodge security regulation in many cases and try to avoid becoming classified as securities. Whereas we in the security token space, we have to acknowledge that we fall under security regulation and just work within it. It's so much easier for us, I think, longer term, because we are already sort of fully regulated and licensed whenever needed, and embrace securities regulation, sort of. So you could say that if we work in many countries around the world, I think we have clients in more than 20 countries, and so we are familiar with many regulations and many jurisdictions. And generally, I think the regulators view a tokenized security just as a digital version of the security, really, that runs on a special type of infrastructure or technology, you could say. And that's the way we hope and prefer that all regulators will view it in the future, really just as a digital version of security, right?
Yes.
That's implemented in a special way.
Right, yeah, because 20 different countries. So obviously you're in Europe, you've got clients in America, you got some in UK as well, yeah?
Yeah.
Do you have any in Australia at the moment?
Yeah, we do.
Do you find that there's big differences in those regulations and the way that those respective governments treat security tokens?
No, most view it just as a digital representation of the underlying security. And you could say if they support to have digital share certificates, for instance, digital versions of the share cap table, transfer of securities over digital rails, right? If all that is supported, then it's relatively easy, I would say, to do tokenization in the jurisdiction. But if it's unclarified and if they have security regulation that specifies that, for instance, a share certificate has to be paper-based, or they have to notarize a share transfer, or as in the UK, you have to pay like a share stamp duty tax if you make a transfer of a security. Then sometimes there are elements in the security regulation that's difficult to digitize, right? And that will also make it difficult to tokenize.
Right, and is that an issue of needing to? I don't want to use the word coerce, but I guess negotiate with these regulators for them to change their process, or are there ways that we can automate it via smart contracts to do that process?
I think both. We try to go both directions, right? But I think that most regulators are actually interested in digitizing their securities regulation because they can see it's the future, right? It is not just to be able to tokenize; it's just to be able to digitize in general. I would say that they need to clean it up.
Why would they not want to make their job easier?
Yeah, right. And I think they do, right. So most of the regulators we speak to are actually extremely constructive and positive towards what we are doing. They really do view tokenization and blockchain as a better infrastructure for the future financial ecosystem. That's a way. That's our sort of feeling, at least.
That's a positive thing to hear. Obviously, and it's coming straight from the horse's mouth. You've got experience in multiple countries, so that's very positive. And I want to comment on your remark regarding utility tokens and those that create said utility tokens and try to avoid being a security. Right? It's interesting. Obviously, we had all. I'm sure you've seen many, just as Jared and I have, like these random companies that pop up. They're offshore. They create a meme token and then take all these people money and basically go bust, right? And that was all 2017, 2018. Like, we saw all that happen. And I've said this to Jared before, and I've said this to other people too. I'm feeling like, the IPO kind of ICO thing was really 2018, but now we're kind of moving into this STO space. And I want to hear your opinion on this, because for me, I feel like, I'll use my correct words, I feel like it presents a better opportunity for people, because if you are a company that is going to go down the securities route, typically you are going to be required to have certain licensing. And that's not easy to do. What's your thoughts on that?
First, I have to say I really dislike the term STO, security token offering, because it came sort of immediately after the ICOs, and everyone thought it would be replacing ICOs. So a lot of STOs were done, and they were equally unsuccessful, right? So just because you tokenize your startup and sell the shares in a digital manner doesn't make it easier to sell the shares, right? So we saw a lot of similarly fraudulent, semi-fraudulent, over-promising projects trying to do STOs. a few years ago and failed miserably. And I think it also reflected poorly on the rest of us trying to develop tokenization infrastructure that it can be used for this. So this is why when we speak to clients, we really want them to understand that the technology is not just to do STOs, right? It's about reducing costs, automating, digitizing, removing the human element, trying to become more transparent, reduce the number of errors in securities transactions. It's about liquidity, right? So it's about enabling liquidity and making liquidity much easier, accessible, inexpensive. And it's about also, I would say, automating the actual sort of investment process itself. So subscribing new investors and so on becomes much easier, right? So you can fractionalize and you can reduce the ticket size. Maybe it becomes easier to raise funding, but not necessarily, right? So of course you can tell your investors that they have more liquidity if they go into a tokenized project than otherwise. But just tokenizing your asset doesn't make it a lot more investable, I would say. So we try to speak against that every time we have the opportunity. And I really would like to see also the term STO to go away, because I think it doesn't help us, right?
What would you
Would
rather?
you have this is the question, right? Would
What
you have,
think's more
say,
suitable?
a tokenized IPO or a
Yes, just an IPO or private placement or public offering using tokenization infrastructure. I think the tokenization term in itself doesn't really change the nature, right, of the underlying asset.
I was actually going to ask, because I did notice on the website you guys are doing your own raise at the moment, but you did specifically avoid a lot of that terminology, and so I think the reasoning has become clear. It makes a lot of sense to me, and it's an interesting one too, because it feels like with the securities space, I mean, the reason we have these products are classified as securities and come under these particular regimes, regulations and compliance regimes, is because since the securities were classified as an asset under Howie or however we came along, we have always had people who've operated on the wrong side of those regimes, right? So the fact that we're going to be bringing onto tokenization, the transparency could help a lot, but at the end of the day, we can't solve human nature, right? We can only take the technology so far. I think the way that you kind of focused on what the inherent advantages are within the tokenization process, I think that is actually a really important point. One of the ones that we've had quite a focus on, and I think you touched on it quickly, is the lowering of barrier to entry, both through having more accessible entry points, like the price points, but also the disintermediation. The fact that people can take, to a certain degree, responsibility of their own funds, their own portfolios, their own strategies, so on and so forth. And that's one thing that I am curious about, because I think it raises a lot of questions around compliance, and I could ask you the questions till the cows come home on that one. But the DeFi space, I personally think that decentralized finance, when used correctly, is also a very strong use case for blockchain technology. And once you start mixing security tokens or tokenized securities per se into a DeFi space, going through what are some of our friends in the space called, permission DeFi, it starts opening up some very interesting opportunities and some very powerful plays, right? But it was interesting. We had a Hannah from Bella on last week, and we were talking about the fact that when you open people up to opportunity, you open them up to risk as well. So what are your thoughts on that? How do you think the industry is probably best positioned to manage that, to give people that opportunity while still de-risking? I know I'm just throwing you all the easy questions tonight, right?
This is a tough question, but so what we see right now is that it's much easier for retail investors to invest into crypto, right, which is extremely risky and volatile, and you get cheated and burned all the time. Whereas getting access to invest into real estate is actually really hard. It's inaccessible, right?
Mm-hmm.
So I think it's a few percent of the global population that invested into real estate. Since it's a security, it's regulated, and you have to, if you want to make a public offering of real estate, of a real estate asset, it's very expensive, and you will be limited, for instance, in the US to work with accredited investors, in Europe, similarly with experienced investors, unless you want to make a full IPO or a full public offering with a prospectus, which is you're looking at 100K bill for that at least, right? So there's something wrong, I think, with the regulation, that it makes it so easy to invest into crypto. That's everyone can do that easily because it's unregulated, but real estate, which is a much more solid, trustworthy, stable asset, is inaccessible actually, or cost prohibitive, I would say, still, even though we can tokenize it. So we sort of reduce some of the cost, but the legal cost is still there.
It is an interesting point, although it kind of raises another question that I've had around this concept. So, as you said, there are certain setup costs, right? I mean, if you're going to be tokenizing an asset, you need to put out an IM, you need to have kind of accountants go through and actually give clarity and oversight to your potential audience. And that does disallow some of the smaller assets from having an effective entry point, or really a strong use case for coming into this market. But I do wonder your thoughts on whether or not that's really a bad thing per se. I mean, there's a kind of a question of, just because you can do something, does it mean that you really should do something? And it kind of makes me wonder, if we had a situation where every single person, right? I mean, I'm down here in Melbourne. We've got it's a population of about 5.5 million people, and I don't know how many properties, but I would assume about 1 million or so, right? Do we need 1 million properties, each one having 1 million tokens, to create 1 trillion tokens out there, where all of a sudden the market becomes awash with opportunity, and everything becomes fractionalized, right? This is actually basically a shameless plug, because obviously we're moving into the tokenization of our portfolios and funds, but I'm not actually going to go down that path, because it does really interest me, because you can almost see, we were talking about the liquidity premium before, you could almost see if there's a significant uptake in the tokenizing of assets, could there be a point in the future where that swings back the other way, and there's almost a non-tokenized premium to say, actually, I own the entirety of an asset, and that has become a rare thing in this world of ours? Or am I just talking crazy?
I don't know. That's a really good question. I don't think I can see that far into the future, frankly.
It's kind of the opposite, right? It's the opposite of
asking for trading tips.
I think you're correct that the securities regulation in itself is not bad per se, right? So it creates certain requirements for disclosure around the assets that you're trying to sell, and reporting and so on, which is good. But it also creates unfair and unequal opportunity in the market, right? So for experienced high net worth individuals, they have much easier access to really good assets that protect their savings and allow them to increase their funds longer term, right, compared to retail investors. So I think that is actually not optimal, I would say, for the development of our global population and their access to investment opportunities.
The equity play.
Yeah.
Right.
Yeah. Well, that kind of segues well into my next question, which is, I guess, how do you see security tokens impacting the future of finance and investment, I guess, positive and negative potentially?
Yeah, so we certainly see a lot of interest from the big financial firms. They view it really as a kind of infrastructure play for them, I think, to begin with at least. So making it easier for them to sort of offer their funds for sale to investors, making it easier for them to sort of transfer ownership rights internally in their funds, making it easier for them to distribute funds to external distribution partners like banks, exchanges, and so on, and generally sort of reduce their back office cost and administrative cost for funds management, and also for making it easier for them to create liquidity, right? So
Yep.
internally and externally. So I think that's initially how they view it, but they also view it as a way for them to fractionalize more easily, right? So they can, instead of just accessing ultra high net worth individuals as today, maybe go deeper down into retail and sort of tap into the 40% of the world's fortune, which is actually held by retail. So they are actually we see increasing interest, and I think that the industry reports predict that a large percentage of all assets will be tokenized in a few years, and I trust that actually quite a lot myself. I think it's almost a no-brainer that it will happen because the infrastructure is just better.
Yep.
We see so many banks and exchanges and financial services firms getting into the space and starting to use the infrastructure first, perhaps internally as POCs, then sort of between intermediaries in their own industry, longer term, hopefully on public chains.
Yeah, it's interesting. I can't recall the precise number, but I remember reading about the estimated savings that tokenization will bring to various industries, and it was an astronomically high figure. Do you know that number by chance?
Nope.
It was in the billions. I'm sure it was in the billions. It was a really high number just from that the automation and the reduction of time and manual input. Like it was an astronomical saving.
Yeah, but I think it's not surprising, right? Because you can automate so much, digitize and automate so much, and you can get rid of so many intermediaries, right? So if you are just two banks making a transfer between Denmark and the US, for instance, or Denmark or Australia, you don't need the corresponding banks anymore, right? You can transfer directly. So they can also use it.
Yeah. Well, here's a question for you, and this is related to what we're just talking about, which is, I guess, how do you see? This is a two-pronged question. So how do you see security tokens being used in the real estate space as well as other asset classes? And on the back of the real estate question, do you think, or do you see that we're going to have an evolution in regards to what a real estate agent has to do? Because Jared and I have talked about this many times. We've talked about, in the future, in the next 5 to 10 years, maybe a real estate agent won't just be selling a house. They'll actually be effectively doing like a crowd sale of a house because their house has been tokenized or something like that. I guess, how do you see that going?
Yeah, I don't necessarily see the basic sort of underlying patterns of people owning their own house that they live in changing so much necessarily. Maybe it'll be possible to fractionalize 10 or 20% of your house to free liquidity for other purposes, but I don't know. I don't think we don't see that so much, I would say, among our clients. Among our clients, and maybe this is also the first use case and the easiest use case, it's more like investment properties, right, that you tokenize and you sell off to investors that are interested in future value appreciation and distributions, or you raise funding for a development project to create some kind of property. That's typically what we see right now. But we do have other sort of interesting use cases, but not really sort of in the home equity, home property space yet, but maybe it'll come.
Yep. Well, you talked about developers, having, I guess, developers use security tokens as a way to raise capital. I guess that is another use case for security tokens, right? Which is helping companies raise capital. Have you had much interest in that?
That's, I think, around 50% of all our clients using it as a way to not necessarily raise the funding, but to make the process easier, more automated, more digital, right? So they basically get their own crowdfunding system that they can run with full control and a high degree of flexibility. So they can raise maybe 10% of the funding for a project through that channel, right? Targeting maybe crypto or foreign or retail investors, and combining it with bank funding and the existing sources of funding that they used before. And also making it possible for them to build up an investor database, so they have a tool to manage an investor database, do the compliance, share cap table management, all that stuff, right? So they have an ongoing system to manage all that, and also to offer the existing investors an easy way to trade.
Yeah, well, your platform does a lot of the things that you'd want it to do if you were going to venture down the tokenization path. I guess for those that are watching and listening, how do you, I guess, ensure via your platform, I guess, the security and compliance of the security tokens?
So we always work with a legal partner everywhere where we do projects. We have our own legal counsel as well. So compliance is, of course, extremely important. The security token protocol that we use is audited, and we know that it sort of fulfills regulation in the countries where we operate. And it's also highly secure. So security tokens, by their nature, can only be transferred into wallets that are whitelisted. So if you wanted to steal the tokens, you'd need to get your wallet whitelisted first to steal it into, which would make it very hard to steal them, right? And the security token protocols also by law need to have the functionality of being able to burn tokens in a wallet and sort of reissue them to the right wallet. So even if you did manage to steal them, we could always reinsert them into the correct owner's wallet. So security is extremely important, but it's also relatively easy to achieve, I would say, with the security token protocols we have today.
Right. That's actually good to hear. I know you want to say something, Jared.
I was just basically on the tech side, because I assume that as we were talking about before with the interoperability, if you're going on Ethereum, what standards are you guys using? Because as in the security token standard.
Yeah, so we use ERC 1400 and ERC 1404, which are basically just two quite similar security token standards. One is from Polymath, requires you to use the Polymath Token Studio to issue and mint tokens. The other one is our own implementation of the ERC 1404 standard, which is also audited, right? And it's a little bit less expensive to use because there's no gas fee to pay to us. You basically have to only pay the gas fee to the chain to use it.
You know, it's interesting, Claus, because as I said at the start of this podcast, I've watched many of hours of your webinars and various guests that you've had as well. You've had some interesting people come and speak on those webinars and shows you've got on YouTube. Can you discuss any of the partnerships or collaborations your platform has established in the security token space?
Yeah, so we've been partners with Polymath for many years, or for several years, not so many years, using their protocol, which we like. It's open source, it's easy to use, and it's interoperable, I would say, with all the other ecosystems in the place. We also have a close partnership with G0 and several of the other exchanges. We listed one project on G0. And generally, of course, we interoperate with many other partners in the industry. I would say we also have a partnership with Fireblocks, for instance, which we see as creating a really secure wallet infrastructure, self-custodied wallet infrastructure, basically for institutions.
Right.
So we have a number of sort of key partnerships that I think will form the future of our industry to some degree, right? So we also partner with Balancer. The DeFi firm, right? We use their technology for our exchange. We're looking at partnering with Polygon. We see Polygon doing a lot of great business development around tokenization as well. We also speaking to Aave for the DeFi lending. So there's a lot of these DeFi actors that do a great job, I would say, both on the legal and institutional and compliance side, but also on the business development side, looking to sort of interact with companies like us coming from the asset tokenization side.
Right, that is positive to hear. And Jared and I are both rather fond of Polygon. Yeah. We think they've got a good organization there.
Yeah, great.
In regards to, I guess, what you've seen in the space over the years that you've been doing this, Have you kind of seen any particularly innovative or exciting uses of security tokens via your platform, or anything you've been part of over the years?
Yeah, I think actually the use case in itself is extremely innovative. And I spoke to a bank a few days ago, last week, and they really see all the stuff that's happening here as hugely innovative and potentially disruptive to what they're doing. So I think that we should not overlook that. I would say the blockchain in itself, I think, is highly innovative, and we can do great things with it. I would say I would state such a simple thing as doing an atomic swap. I think it's a great innovation actually compared to what you could do in the past, right? So you can now handle both the payment and the asset itself in digital form within a software program outside the existing banks and financial ecosystem, right? So you can represent a share and the payment in USDC, for instance, and you can make an atomic swap, so you are sure there's no counterparty risk when you trade, which is actually a completely new innovation that you couldn't do before you had the blockchain.
It is
You'd be
amazing.
forced to work. It is actually quite amazing, right? And
Mm.
it's something that we've been able to do for several years, but I think a lot of people don't really understand how amazing it is that we can do something like that, and how
For
potentially
those
disruptive it is.
for
Right?
those at home, Claus, could you quickly just explain in layman's terms atomic swap for those that don't know what that is?
Yeah, it's if you want to trade like 10 real estate backed tokens for 10 USDC, for instance, then you make a swap, right? Basically, so you swap the payment with the digital real estate tokens, and you do it as an atomic operation, right? So one operation that is unbreakable. So you can be sure that either you have both transactions carried out, so both transfers are made, or none of them are made, right? So you either have no swap or you have a complete swap.
Mm-hmm.
And it's fully guaranteed by the smart contract running on Ethereum or Polygon or any other chain, and fully sort of smart contract based, right? So it cannot be broken or hacked. You are 100% sure that it'll be carried out.
Wonderful. Yeah, I think it's amazing, and just to think that we're still in the early stages, and we're just going to have many more developments occur over the years.
Yeah, I think that the technology can do a lot of stuff that we haven't realized yet, right? I think the intuition comes later about what we can use it for. So we'll see so many use cases, I think in the future that we can't imagine now.
Yeah. Well, that kind
Which
of
is why it's so
leads.
exciting to be in the space.
Absolutely, we love it. Every day, it's like we're learning something new. I can just imagine, because obviously we're focused in Australia primarily, but you're getting to see, I guess, via your platform and the people that are interacting with your platform, you're seeing how different countries are, I guess, interacting with security tokens, tokenization, and all this good stuff. So I guess from your perspective, you've been on the horse's saddle now for a couple of years. How do you see the regulatory environment for security tokens evolving over the next 5 years? What do you see is kind of coming up?
Yeah, we spoke a bit about it earlier, right? So I definitely see crypto regulation catching up with security token regulation, right? So crypto will become equally regulated as security tokens. So the two areas will converge, and everyone working with securities will much more easily be able to also work with crypto, and will sort of actually be ahead of the rest of the pack. Then we will see, I think, also a lot of regulators sort of cleaning up the regulation to allowing all securities transactions and processing to be digital, right? To begin with, right? And if it becomes digital, we can also tokenize it. So I think that's one trend that we see. And then of course we see MiCA in the European Union, which is sort of a regulation for all of the European Union, but mostly focused on crypto assets for now. So we see that kind of sort of regional continental regulation that is covering a lot of what we're doing, and I think will influence the security token space too. But actually, maybe to summarize, I hope that we will actually not see too much regulation influencing what we are doing, since security tokens, as I mentioned earlier, really should just be viewed and understood as a digital version of a security using a special type of infrastructure to facilitate it. So hopefully that's the way most regulators will see it, and will sort of ask for no further regulation in addition to that.
Absolutely. We're approaching the top of the hour now, so I've had a fantastic conversation. I've been looking forward to this chat, Claus, because I personally am fascinated with tokenization and the opportunities and possibilities that come with it. So I've really enjoyed this conversation. I guess for those that would like to follow what you're doing at DigiShares more, get in contact, maybe reach out, what's the best way for them to be able to follow you, stay in the loop?
Sign up for our newsletter on our webpage, or follow us in our Telegram channel. I think those are the two best. Maybe LinkedIn as well.
Yep.
So yeah, we're quite active in putting out content. We do, I think, 8 or 9 webinars this year. The first one coming up on the February the 15th.
Yep.
Focused on institutional tokenization. We're also doing masterclasses. We'll be in Miami beginning of February. Later in the year, New York, Las Vegas, Silicon Valley, London, and so on. So we are out there.
Wonderful. And for those at home,
the
website is digishares.io if you want to go there. Highly recommend. I'll actually be tuning in to watch that webinar on the big players coming in, institutional. That'll be very interesting, I think.
Thank you. Sounds great. Thank you.
Beautiful. All right, guys. So you know what the deal is. Go ahead and hit that like button. Share this around with people that would get value from watching this. And, we'll see you on the next episode. Go ahead and subscribe to DigiShares, because they are constantly putting out some amazing content. And if you, just like Jared and I, love this field and this industry, then definitely sign up. We'll see you in the next episode of Token Talks. Bye-bye.